While retail investors chase trends after they've already started, smart money quietly builds positions before those trends even begin. Retail investors react to what's already moving, but smart money anticipates what's coming next. So where exactly is smart money positioning itself for 2026? Welcome to Money Mastery, your step-by-step guide to financial freedom and building real wealth. We're breaking down how big institutions think and where they're quietly positioning for the next major market cycle. Let's talk about smart money and why it moves markets in ways most investors never see. Smart money isn't about luck. It's about strategy, patience, and deep analysis. Smart money includes hedge funds, pension funds, sovereign funds, and large asset managers who control billions. When smart money moves, it creates waves that shape market trends, price movements, and capital flows. So, how do these institutional giants actually think about investing? They don't chase price. That's the first rule of institutional investing.
Instead, smart money strategy focuses on long-term themes, valuation gaps, capital rotation, and demand shifts.
They invest early in trends and then wait, sometimes for years, for the market to catch up. Looking ahead to 2026, smart money is watching 5 major themes that could reshape markets. First up is artificial intelligence, spanning AI infrastructure, chips, robotics, and productivity tech. Clean energy is next, covering renewables, battery storage, power infrastructure, and the EV ecosystem. Healthcare innovation includes biotech, longevity tech, diagnostics, and AI-powered medicine. The infrastructure boom focuses on roads, smart cities, and digital infrastructure that powers modern economies. Finally, financial digitization encompasses fintech, digital payments, and blockchain infrastructure, transforming how money moves. Now let's look at how smart money actually builds these positions without moving markets against themselves. They buy slowly, scale in over months, diversify across themes, and hold for years. They don't try to be fast. They try to be right. What can retail investors learn from this institutional playbook? Avoid chasing hype and reacting to headlines. Instead, think in cycles, buy value early, and hold patiently. The market rewards patience more than prediction, and that's a lesson worth remembering. Which sector do you believe will dominate? AI, clean energy, healthcare, fintech, or infrastructure? Remember, trends don't start on YouTube. They start in boardrooms where capital decisions are made. If this gave you clarity, hit like and subscribe to stay connected.
Up next, we're covering the top 5 wealth mistakes that keep people poor.
Thanks for watching, and I'll see you in the next video.